finding a profitable and consistent trading strategy is a golden dream for many FX traders. James Chen, Chief Technical Strategist at CT Index, also thinks that there are other steps that a trader should follow. Hello James, thank you very much for being with us.
Hello Naomi, thanks for having me.
Okay James, so what are these other steps that a trader should follow?
Yes, there's several steps I think. First of all, you need to find or develop a strategy, a trading strategy with exits, entries, and all of that. Next, once you have that strategy, you really have to do your homework. You really have to test that strategy to make sure that it works for you. And if it doesn't work for you, you have to be able to change it and really make it your own. And once you do that, you want to be able to test it forward. So you want to put it to the market, put it to the test, and see if it actually works for you over time. And you test your expectancy. You want to have a high positive expectancy for any trading strategy that you're using. And once you do that and you're sure that this works for you, then at that point you really have to stick to your plan, stick to your strategy, and do not deviate from it, because if it does work for you, you want to have confidence in it. And until it stops working for you, you really have to have that confidence and do not deviate from that plan.
But if it stops working, what should I do?
This often happens. Strategies, they work for some period of time, and then markets change. So oftentimes you'll see that a specific strategy does not work for you at a certain point. At that point, you got to be able to go in there and tweak it, to change it, and really take it to the current market and see that it works for you going forward. And once you do that, again, you have to have confidence in it and do not deviate from your plan.
Okay, let's say that I've been trading for equities for a certain period of time,
yes,
and I want to change to FX. Which strategy would you recommend?
Well, for the equities markets, I think a lot of equities traders are, especially technical traders, are really accustomed to the type of pullback trading, which is basically you find the trend in the share or the stock, and then you look for pullbacks or retracements or corrections, and from there, let's say there's an uptrend in the stock, then you're looking for to buy on the dips. To buy on the pullbacks, and that really makes a lot of sense. And in the FX world, in the foreign exchange world, it also makes a lot of sense. You oftentimes see a lot of trends occurring in the currencies, and then you're looking to play the dips, whether it's to the upside or to the downside, and that type of strategy really makes a lot of sense to me.
And what is your preferred strategy?
Well, that's actually one of my preferred strategies. I have many strategies according to different market conditions, but in terms of my favorite strategy, it's that. I look for the trend, I look for a pullback, and then I look for a breakout back in the direction of the trend. So, I have an acronym I call TPB, which is Trend, Pullback, Breakout. So I'm looking for the trend, I'm looking for a pullback, whether it's a dip or a rally, and then I'm looking for a breakout in the direction of the trend, and I'm going to take advantage of that opportunity to get into the trend.
And you don't look at the fundamentals at all? No, or you don't pay attention to the news, or do you?
I do. I do pay attention to fundamentals, but I am essentially a technical analyst. So what I do is, I will pay attention to news and fundamentals to give me some idea about the general direction of a particular market. But from there, it's almost all technical. So I'm looking for my entries, I'm looking for my exits, as well as the trend, using almost exclusively the technicals.
And last question.
Sure.
What about the principles of high probability trading? Could you briefly summarize those principles?
Absolutely. I think in order to create or find the perfect high probability strategy for you, you really have to do your homework. A lot of people, think that trading is easy. They get some strategy and then they go ahead and they use it and they make a lot of money off it. That's not the way it works. The way it works is you have to work at it. You have to do your homework. And when I say do your homework, what I mean is you have to test your strategies. And when you test your strategies, you have to make sure that you are overall consistently profitable, because that's really what everyone's looking for. In order, you're going to have your losses, you're going to have your risk in place, but overall, you need to have a situation where, on a net basis, you are consistently profitable, and that's really how to go about finding a high probability trading strategy.
Okay, so test, and doing our homework.
Absolutely, that's it.
Thank you, James. Thank you very much.
Thank you very much, Junio.